Good morning and welcome to the Trading Lounge. And here we're looking at the S&P 500. But as you know, the S&P, the US markets were closed last night, but futures operate. Look, there's a couple of problems that that we need to sort of work through. And as you know, when we're in a trend, we need to prepare for corrections, and when we're in corrections, we need to prepare for trends. So the S&P 500 here, we've got a wave count for this to the upside. Okay, now. We need to be a little bit careful because the Dow Jones is struggling at 14,000, and there's been some other movements in the market that could help create a top here, such as the US dollar edging higher, even though we expect that to turn. And just looking at that at the moment here, as I pointed out the other day, that this particular move, this is a daily chart here, this particular move here is corrective. Okay, so we know that this pattern here is corrective. It's a continuation pattern. So this move down through here, this being a corrective continuation pattern, at some point it will move down. How high it goes is what we're looking at through here. There is strong resistance at 50, 72 and 81, which the price is up here at the moment with that. It could also create a nice sort of head and shoulders with this situation over here, this being a shoulder here and creating the other part of the shoulder here before we see downside. But any more movement, I mean, once it's above the 80 here like it is, and it's been retested here as 80, so it is you know, it's support. That's what's occurred here. I mean, that moved up through there but came back down. It didn't find it as support, did it? Then it retested it here and found weaker and made a new low. But in this particular case here, it has retested it as support, so it's confirmed that it is support, and that means that we've got to consider this, a positive market to the upside. So we just need to allow this to play out, and we're not sure how high it can come to. It can either come to the 81 or the 82, but any further movement up through here obviously places pressure on rates and also stocks as well. So we've got dollar and bonds moving up, and that will place pressure on stocks, but it also places pressure on well, of course, the euro and other related currencies as well. But for Australia being a commodity dollar, it certainly places pressure on base metals as we trade in US dollars. And we've seen copper break to the downside on copper. It's broken through a significant support, 372, and we'll look at that in a moment. But on the US markets, but if we look at that in the London markets, let me just find that for us, the LME copper here on a daily chart here. It is a larger market, but we always look at the last closing price, which is more important for the Australian market, I guess. So, look, but what I want to point out here is that this particular pattern through here, and we've looked at this before, this is a daily chart through here, we've obviously got this triangle sort of pattern through here, and a triangle in Elliott terms, each structure is in 3 waves, and there'll be 5 waves in all, so the 1, 2, 3, 4, 5, and they're labelled as an A and a B and a C and a D and an E, and it's basically diminishing in time, a bit like a sound wave. It's nature's stuff. But the main point is that this being in 3 waves here, a bit like copper, a bit like US dollar here, is it's a corrective wave. So being a corrective wave in a trend is come from the coming down here, makes it a continuation pattern. So once this triangle is completed, then we'll see further downside, and that's kind of what we've seen last night. We're seeing a little break in that should take that low out there. That's what it should do there. So what I'm thinking here is, especially for the Australian market, is that this can certainly create a top, and of course we're looking for a top in the ASX 200, the cash market, around the 5,000 area there. So this could be the catalyst that that weighs it down. I know that reporting season, is in full swing at the moment, and that can prop things up as it sort of has been doing. But this could be the catalyst that could sort of pin that top there. So, and it also sort of brings me to, if we have a look at say BHP, just bear with me a second while I pull that up. And this would be the same for Rio as well, and obviously the materials sector and so forth. But just wanted to have a look at the wave structure up through here, because you know, we're in a in a bullish market as such, as you can see, but at the same time we need to be just sort of mindful of what we've got. So this move, say, we'll come back to this one in a minute, but from this point here, we've got like a 5-wave pattern to the upside. So we've got something like that at the moment. So that would actually be perhaps there. The wave 2 would be here in terms of an A and a B and a C for wave 2 here. That's possible, or that can be the 1 and the 2 there. It doesn't really matter. It still says the same story, because this one here, this strong third wave here, has got the 5-wave structure in it as such. So that gives us 5 waves up. Now that's a positive, but this little wave here, that can be that can either be wave 1, or it can be an A wave, and this can be a B wave here. Now the reason I'm saying this for is that this structure at the moment that's going up here can be counted as an A and a B and a C wave in 5 waves that will complete whenever it does here, probably into the 40 here. So it can be counted as a corrective wave through here at the moment through here. So we need to be mindful of that. A positive wave would be an impulse wave, and that would be, once this is completed here, if we've got 3 waves back again here, that would be wave 4. So we've got wave 1, wave 2, wave 3, wave 4, and then we'd have 5 little waves up for wave 5 there. And if we got that structure, then we've got, you know, then we've got an impulse wave up. We've got basically a larger 5-wave structure like this, so to speak. And then that would be a positive, because after that had finished, then we would get 3 waves back and then another 5 up. So look, all I'm pointing out here is that this we've been positive through this, we've understood it, but it's at a point here where it can be a large corrective rally, or it could turn into a larger impulse wave. So it's something that we need to be mindful of, because it also tie in a top here as a rally would tie into the copper market unfolding as well, and also creating a top in the in the cash market. And Rio's the same as well, and the material sector the same as well. Yeah, so and even when you look at the commodities in general, so if we looked at where are we here? If we looked at UBS's commodity index here, you know, I'll just bring in the whole picture here. That's sort of it there. So obviously we've had this sort of strong bull market up through here. From the top here, we've actually got, this is actually an impulse wave to the downside here. It's an impulse wave into, and the commodity index here takes on all the commodities, so they'll all be tucked in here, so they'll all have their percentage of weight within here. But this is 5 waves down through here, and obviously this is the 5th wave here, and this would be the 4th wave here. So this would be, so this would be down for 1 here, then the A, B, and C for 2. Okay, so it's wave 2, and then wave 3 being the longest and strongest will also have 5 waves in it, and that would be down for 1, back for 2, and the 3rd wave down. This is where the 3rd wave, this is where the gap normally occurs, so everything's fine. The 4th and the 5th here for the 3rd. So we've got a nice 3rd wave, 1, 2, 3, 4, 5 for the 3rd, the 4th, and the 5th. So then we normally get an ABC rally, which would pull back 50 or 60%, which this one has here, normally in 3 swings. So this swing here may just be the first swing. There still may be something a bit like this to come here. as such. But this little move that's coming in through here at the moment. This is also what I want to point out here. This move down through here is also in 5 waves as well. So 1, 2, 3, 4, and 5. So this. So if we've got 5 waves here after a little ABC, which can be that one in here or another little one here, then we'll have another 5 in here as well. So there is downward looking pressure on these commodities, and especially as the US dollar index pushes up. So we need to see that US dollar index fail pretty much straight away around the 81. Otherwise, we're going to see more downside in these markets. So the only flip side I can see that's that's positive is is the S&P 500. Now the S&P 500 basically needs to push up from here to be positive. So we can see that this is a corrective pattern within here. So you know these lows here really need to stay in place. It needs to find support on the 1520 here, and it needs to push up from that point there, and that would keep our bull market in check. So if you see over the next day or two when you're trading that the 1520 here starts to become the resistance and it starts moving down, well then you'll have a bit of an idea, and seeing the US dollar push up with the bonds pushing up as well, and the treasuries down and the stocks down as well, then you'll get some idea of what could be unfolding in front of us. So I just thought that was important to put out there. So because this particular move that we've got here, this is a triangle pattern, and triangle patterns are 4th waves. Okay, they're not wave 2s; they're normally 4th waves, and then the 5th wave would be 5 waves up. So that's why I've got that alternative 5th wave here, and the length of the 5th wave is normally the distance of the triangle there. So it's pretty much sort of not quite there just yet, but reasonably so. So that can be the top there. Otherwise, we're going to be looking at this up for 1 here, A, B, and C, as I've got it here for 2, and then the 3rd wave pushing up through there. So I think it's good that that we understand this, and then we'll know once we see this push up through here, then we'll know that we're on our way at that point there, and then we'll retain that sort of bullish market there. The Dow Jones the same as well. It's really sort of stuck under it's a bit messy through here. I understand that, a bit complicated to work out. But once again, we've got the up for wave 1 here, the A, the B, and the C for 2 here. So we really need it to stay under this 13.9 here. So you can see that if we get a drop down through here, then you can kind of bring in the US dollar and what's happening in the base metals as such as well. Yeah, and the Australian market, the European market, I'll just sort of move in here a little bit. This with the obviously the euro, the euro and the S&P 500 have got a relationship there. Okay, so looking at the S&P 500 at the 1520 there as a line in the sand being positive and negative, the DAX will also be a part of that as well, because the DAX and the euro are working together quite nicely at the moment. So the 76, the easiest way I can sort of simplify everything is the 76.50 here is a midpoint here, and it is also the line in the sand as well. So this move back up here, we could actually have an A down to here, a B to here, and a C to here, and that's finished. Okay, and then we see the market move up, but it would need to find support on the 76.50 here to be, to work that. So that will be the line in the sand to work with on the DAX, and you can, even if you trade in the euro, you would need to bring this into the equation as well. The flip side to this is that this little 5-wave structure to the downside here could just be wave 1 here. That means that we're coming back for wave 2, which would come back to the 76.50 area and then fail from here and then roll over to the downside. And the euro would be doing exactly the same as well from the 133 or the 133.50. So we'll have a look at that in a moment. But the FTSE here is also in a positive territory as well. As such, is because this move that started here in early February here is a corrective wave here. So this move up through here, we can either get a fifth wave up through here, such, and that would be a positive move up through there in terms of the 1, the 2, the third wave here in terms of 1, 2, 3, 4, 5. This is the fourth wave here. And then the fifth wave up through to here. But it also could be a B wave up here as well in 3 waves in terms of an A and a B and a C wave up here, and then a C wave back here. So then that wave 4 would have to go over here in terms of an A, a B, and a C over here, and then we would look for support on the 63 there. So the fact that that has got 3 waves there makes this market a positive. There's still upside to go here, so that's I think that's an important little note. The Australian market as well. It hasn't reacted at the 5,000 here, but that's okay. What you can sort of need to understand next is that there's basically 2 things that can happen when it reaches a level. It will either reach the level, be sold off here, react, and have its sort of corrective move to the downside. Now, if it doesn't do that, that's what I call part of the classic pattern. The other pattern is the overshoot pattern, where it just ignores the number completely, but the distance it goes above will be the distance it swings below. And it's quite normal to look at the 5,100 here as the first level. It's the first minor level. So if it touches on 5.1, then you can expect it to come back to 4.9 at that stage. Okay. So the banking sector is going through its reporting season at the moment. So once that's sort of done, that's been the driver in the market. Because the base metals, you'll see when we look at the base metals in a minute that that they've broken support and they'll be moving further to the downside, and that can be the catalyst to bring this down here. So day traders here would need to be looking at the 50.72 here. Let's find it in here. So we're tracking this little 5-wave structure to the upside through here, and this is a little 4th wave here as we worked out the other day. So we've got basically 1, 2, 3, 4, 5 to here, and then still not very clear there either. Let me just have a little look here. Look, the bottom line is that if this market finds support on 50.72, you can be long. Otherwise, it will be bearish under. So being on the right side of 50.72 would keep you safe and keep you in the right direction of the market. Let's have a look at the base metals, as they're a little bit more important. Okay, for the gold market, as you know, well, the price has come down to the 1,600, and being a large number, you just expect a bounce, and we've got a bounce in 3 waves here, so an A and a B and a C for wave 4. However, wave 4s can get rather complicated, so that means that that this little leg here just may be the A wave. We may get some sort of B wave here and then a C wave here before we move further to the downside. But the trend is from the 1650 here is still unfolding to the downside. We've got that strong 3rd wave now. So we've got the 4th wave here. We'll be looking for this wave 4 here to complete itself, and looking for wave 5 of the 3rd to the downside. Now, once we've made a new low through here, then we'll be seeing. So at some stage, we'll make from this point here, we'll make a new low down to here, and then we'll also see the next pattern here, which will be wave 4, and wave 4 normally pulls back to the wave 4 of 1 less degree. So we've got to put that there for the time being. So, as I mentioned, we're just working through a series of waves 3 and 4, and then once that's completed there, then we'll be looking for another move down through here for this wave 5 here of wave 3 here, and once that's finished, well, this is another wave 4, so it can also pull back to the wave 4 of 1 less degree, so that can occur there as well. So it may not go that high. We'll just see how the rest of the markets travel, but it could be certainly like that. and then another fifth wave making another low here. So, just basically saying that, the vibration across the 1600 is sort of what we're looking at. And it will be the same for silver as well, at the major trading level here, 30 as well. So it should stay within, that's the wave 4 there, so it can come back to 30.50 there. If you want to lock in part profits, well, this is a place to do it. So this can be a little A, B, C back up into this area through here, but we're also got to expect, more of a corrective pattern in this space here. So the 30 would be the the balance line. Group 2 here below would be the support, and group 1 here, its job is to hold the price to the closest largest number, and that will be there. So and as we mentioned before as well, is that this is base metals and precious metals normally have some sort of relationship within themselves, and the base metals have been holding up really quite well, but now they've broken to the downside, so they're likely to follow the precious metals. And as I mentioned, that triangle pattern on the daily chart with the LME copper, we could see that it's possibly topped out there. We thought we might get another little wave to the upside here, but that's not the case. Now, there's a couple of ways of looking at this. This here could be the top, and that would line up with the top of the triangle in the LME chart that we were looking at. If you just bring that back here a second. So basically that's this A, B, C, D, and E here. So that top there, that could be that what we're looking at through here, just in here. And if that's the case, then we're going to see this situation move to the downside here in terms of down for 1, back for 2, down for 1, back for 2, the next smaller degree, down for 1 and back for 2, down for 1 and back for 2, and the third wave unfolding, and it continuing to the downside here, unfolding in that impulse wave. The other side to it is that looking at this larger pattern here, is that it's possible that this 3-wave structure here is also just a larger correction in terms of an A wave to here, a B wave to here, and then a C wave down to here. And the C wave will be either down to this point here or a tad lower through here. And a C wave is always in 5 waves, so we'll be looking for 1, 2, the whole third wave down to here, the fourth and the fifth wave. Either way, we'll be looking at a 5-wave structure here in both cases. So we'll be looking at a weaker metal price as such. Now there will be support here at the around these old lows here, let's say. And that will sort of hold it there for a while, but it should edge lower through here, which is obviously going to affect the Australian and the Canadian market and so forth. So so that's the point of weakness that that could be the catalyst for bringing the indices back into their closest, largest numbers, and with obviously the higher US dollar as well. So. So even though the markets are really strong, this could be a bit of a turning point here that's subtly sort of moving in, and that's why I'm sort of just pointing it out. The oil market is pretty much doing sort of not much of a change here because it follows stock and the stock market was closed, but we do see a more positive picture here as well, in line with the S&P 500. So the A wave, the B wave, and as you know, we're tracking the 5 waves down for the C wave here. Once that's completed, then we'll see a move up. Now, I do understand too that that if this is 5 waves down through here and we've got this 3-wave counter trend here, then would see the 5 waves down here. But if we start to see an impulse wave here, 5 waves to the upside, then we know that we're going to be moving above 100. If we see this complete down here and then move up in 3 waves and then roll over, then we know that we've got to a larger bear market here as well. So we'll work with that as it unfolds. But in the meantime, we can expect wave 4 to be in place there. Wave 4 may get a bit more complicated, but essentially it's in place there, and we'll look for a wave 5 down to the 95, and then we'd expect a bounce off here. So either wave count, it's going to bounce back up through here. I think we've got Woodside reporting today, and that looks quite a positive market as well. So when we have a look at WPL through here, we can see that it's quite positive in its structure. But even from this little point here, you can see that there's 5 waves here. So that reporting, when it's finished, can create the little top here. So we'll see how it goes after that, because it's I can kind of see in this situation too. I can see that if oil does push up, then this will be quite a nice long trade to work with as well, because this move down through here would be the A, B, and C here for the 4th wave, and the 5th wave down through here in 5 waves. So that would make this up for 1 here, A, B, C, back for wave 2, and then this is up for 1 and back for 2 here, and then we've got this sort of stronger 3rd wave coming into play here. But there's no need to rush into it. Let's wait for the reporting season, and let's see what happens with the stock markets in the US and also the metals market as well. And let's just see what we've got. We're not going to miss any bull run to the upside, but just need to be cautious just for a moment, just to see what's unfolding. We're seeing some subtleties in weakness present themselves, and we just need to just observe them before we do anything. Alrighty, well that's it. There is other reporting going on today. Well, quite a few, I think. Let me just have a little look for you there. The 20th, February the 20th, we've got Aristocrat, we've got Suncorp, which we're in, and we know about that. I'll just leave out the smaller ones through here. We've got Oz Minerals, got Kingsgate, that's not confirmed yet. Iris, that's not confirmed. What else we got with a decent size in here? Toll, not confirmed. What else we got? I've got the webcast for BHP. I've got APA, GrainCorp, Fortescue. And that's sort of about it. Still earnings driving the markets. So we need to sort of let them settle. But let's keep an eye on the base metals, and it'll be interesting today to see how that impacts as well on the cash market, on the 50.72 area there, and see how far it folds back. Alrighty. Well, good morning and good luck.